industry including Titan, Kalyan Jewellers Senco Gold and PC Jewellers crashed by more than 10%. And the reason behind the sudden fall, a strong message from Prime Minister Narendra Modi. PM Modi recently urged Indians to postpone gold purchases and avoid unnecessary foreign travel for at least 1 year. Why? Because India is currently facing pressure on its foreign exchange reserves due to rising global tensions and soaring crude oil prices. And as soon as this statement came out, investors panicked. The stock market reacted immediately. Titan shares dropped over 7% in the early trading. Kalyan Jewellers Senco Gold and Sky Gold tanked over 10%. For investors who were hoping for a strong recovery after the weak festive season of 2025, this became a major setback. But this wasn't just about jewellery stocks, the entire Indian stock market was under pressure. The Sensex fell more than 1100 points during intraday trading, while the Nifty also declined sharply. So what exactly is happening? Let's break it down in simple terms. India imports a huge amount of gold every month. In fact, official data shows that India imports nearly 60 tons of gold every single month. And this creates an import bill of almost $6 billion monthly. Now imagine this happening at a time when oil prices are also rising rapidly because of the ongoing West Asia conflict. Higher crude oil prices means India has to spend more dollars on imports, and when a country spends too many dollars, its foreign exchange reserve starts falling. That's exactly what is happening right now. According to RBI data, India's forex reserve recently dropped by nearly $8 billion in just 1 week, and this is declining to all the policymakers because forex reserves are extremely important for any economy. These reserves helps the country manage imports, stabilize the currency, and handle economic crisis. If reserves fall too fast, the rupee can come under pressure, and when the rupee weakens, import becomes even more expensive. It becomes a dangerous cycle. That's why PM Modi appealed to citizens to reduce non-essential spending, especially on imported items like gold. Market experts say this situation is directly linked to rising tensions in West Asia. According to investment strategist Vijay Kumar, two major problems are hitting the Indian market right now. First, the expected easing of the West Asia crisis has not happened. Instead, tensions have increased further, causing Brent crude oil price to spike over $105 per barrel. And second, PM Modi's appeal for austerity measures has created concerns about slower economic growth because if people reduce spending on sectors like jewellery, travel, hotels and luxury products, these industries may see lower demand and investors hate uncertainty. That's why gold and jewellery stocks saw heavy selling. But here's the bigger question, should investors panic? Well, experts believe this could be more of a sentiment-driven reaction rather than a long-term collapse. India has always been in a deep emotional connection with gold, whether it's weddings, festivals or savings. Gold remains a major part of Indian culture. So demand may slow temporarily, but it may not disappear completely. However, in the short term, the market could remain volatile, especially if crude oil prices continue rising or if forex reserves keep falling. So the big question is, will gold stock recover soon, or is just the beginning of a bigger correction in the market? Do you think people will actually postpone buying gold after PM Modi's appeal? Comment your thoughts below. If you found this video informative, don't forget to like, share and subscribe for more stock markets and business updates.